Hey guys, welcome to Individual Investor. Some of you know that I'm currently doing a 3-year investing project using the magic formula. Well, I have also decided to start another investing project for Phil Town's Rule 1 investing. So I will share with you guys the current process that I'm following to find Rule 1 investing stocks, and also we'll take a look at the Taiwan Semiconductor Manufacturing Company, ticker TSM, which is a stock that I'm currently following as a potential candidate for the portfolio. All right, let's recap the Rule 1 fundamentals. Philtown starts by referring to the 4 M's, meaning white moat, management, and a margin of safety. In addition, there's also some quantitative criteria to find good businesses. Philtown calls this the Big Five. These are the return on invested capital, sales or revenue, earnings per share or EPS, equity, and cash. And the idea behind Rule 1 investing companies is that you have to find companies where each of the 5 or Big Five figures has had a growth of at least 10% on average over the last 10 years. And next, after finding a good or a great business, you have to calculate the sticker price, which is the real value that you think that the business is worth. And finally, you have to assume or discount a margin of safety of 50% before even considering investing in the stock. Something that I like about the book is that it incorporates a little bit of technical analysis so that you know when to enter and when to exit a position, which I think is important because if done right, you can really optimize your returns. Phil calls this the 3 tools. The 3 tools or 3 technical indicators recommended in the book are the MACD, the stochastic, and the moving average. I do think that they oversimplify the definition and the use of these technical indicators, and I also think that there are only like 1 or 2 examples in the explanation. So I will highly recommend that you guys do some additional research on top of what you learned in the book. Let me show you how you can go about finding Rule 1 investing stocks and some of the tools you can use. In my case, I use Morningstar to screen for companies with a wide moat and also with a solid management by looking at the capital allocation. I also use Morningstar to calculate all the financial performance figures over the last 10 years for each of the Big Five numbers. Then for the projected or growth estimates, I look at Zacks and also Yahoo Finance. And finally, for the technical indicators, I use TradingView. Let's take a look. Okay, here we're looking at the stock screener on Morningstar Investor. The first thing I'm gonna do, I'm gonna click on ratings and only select companies with 5 stars according to the Morningstar Analysts. Then we're gonna select companies with a wide economic moat. And finally, companies with an exemplary capital allocation. What I really like about this setting is that, as you can see, all these companies are massive. This means that there is an army of analysts actually analyzing and researching these companies pretty frequently. So we can rely on all the hard work they're putting in already. So in order to determine if a company has a good or solid management, we can look at the capital allocation. The meaning piece, for me, I am currently following the semiconductor industry. So I looked into ASML, Lam, and Taiwan Semiconductor Manufacturing Company, or TSM. And what I did next, and what you can do as well, is actually go to Zacks and look at the future growth of these companies. So if you go to Zacks here, we can click on detailed earnings estimates. They won't give you the next 10 years, but at least for the next 5 years, you can see that they expect a growth of 24.10%, and this is in EPS. And if we look at the other company here, Lam Research Corp, for example, we'll see that, I think it was about 10. We see that, yeah, the next 10 years or 5 years, sorry, is 11.80. So I decided to look further into TSM. And you can also cross-check this. Let me go back to TSM. You can cross-reference SACS with Yahoo Finance. So if we go to Yahoo Finance and go to TSM, and then if you click on Analysis, you can see here that here, the growth estimates for the next 5 years, they're calculating or estimating 24.2. Okay, so actually pretty similar to ZACS. Okay, so I decided to look further into Taiwan semiconductor manufacturing, and then my next step was to actually look at the analysis from Morningstar. So something that you can do as well if you have a subscription here is that you can read the full analysis, which is very, very good. It's very comprehensive. And again, it will give you a lot of insight into the company, the risks, the growth prospects, and many other useful pieces of information. So now the next step here, and this is where I will go to my spreadsheet. Okay, I've done the analysis already for TSM. So you need your big 5 numbers, return invested capital, sales, EPS, book value, and cash. So you can get all of these straight from Morningstar. So if we go back to Morningstar and we go to the operating performance, you can get here the return on invested capital for the last 10 years, as you can see. Okay. So what I did here, I took all these figures, and you also have the 5-year average. But what I did, I took all the figures here and calculated the 10-year average, okay, which is 21.94%. So that's more than 10%. So that's a check for us. Then the sales revenue and the EPS. The good thing about these 2 figures is that you can actually find them straight from Morningstar. So if we go to Valuation, we can click here on growth, and you can see here that for the year 2021, right, the 10-year average is 14.03%. So this figure is right here for you. Okay, and the same goes for the EPS. They have already the 10-year average for you calculated, which is pretty nice. And it was 15.99%. So I took those 2. And then for book value and cash, that's just those are just standard numbers available on the balance sheet. So if you go to financials and balance sheet, let me just collapse everything. So here you can find also for the last 10 years the equity or shareholders equity, which is the same as the book value. You can go to the total assets and look at the cash and cash equivalents and look at the growth over the last 10 years. So I grabbed all these numbers from here, and I like doing everything by hand. So I calculated the book value and the cash growth for the last 10 years, and the average per year was roughly 13% for the book value and 26.33% for the cash. So all green for us. Then the financial health, you want to make sure that the long-term debt can be paid off within 3 years using free cash flow. So these are numbers that you can get from Morningstar as well. And it turns out that for TSM is 2.33. So we're good there. And finally, I did the sticker price calculation as well. So for the sticker price calculation, you need the current EPS, which you can get from Google Finance straight here. I also took the growth numbers from SACS and Yahoo Finance, and I simply took the lowest of the 2. So the PE, the future PE, or the PE default as defined in the book, will be twice the growth. Okay, so 46.4, and then that's the trailing 12 months PE, which we're not using. Then the return invested, or return on investment, sorry. Phil Town recommends that you always use at least 15%, but you can put whatever you want here, 20% or something else. But if we stick to the rule 1 criteria, it's going to be 15. So what I did here, I calculated the future stock price by simply using the future price calculation. So we are multiplying the EPS times the future PE to get the price, and then we are calculated the growth over the last 10 years. Okay, then we get that future stock price. Then the sticker price will take the future stock price, and then we do the opposite. We calculate the present value of that future stock price using the same 50% ROI and over 10 years, and then we arrive at $434 for the sticker price, and then the margin of safety price will be half that, and the current price is actually much lower than the margin of safety price. So according to this analysis, this is a textbook example of a Rule 1 investing stock. And to validate that my calculation was right, I also used the Phil Town's own website here, where he has a margin of safety calculator, and I used the same figures, the EPS, the future growth rate, the PE. So all the figures that I used, and I think I got, almost, so the margin of safety 217, which is very, very similar. Actually all the same figure that I got. Okay, so now everything is pointing in the right direction. The last step, based on the Rule 1 criteria, is actually the technical indicators. Here we're looking at a daily bar chart of TSM, and here I am plotting all the technical indicators recommended in the book. So we have the moving average here, which is this red line. We also have the MACD and the stochastic. And as you can tell, none of the indicators are recommending or indicating that it is a good time to buy the stock yet. So if we look at the price action here in the last days, is below the moving average, okay, which is a red line. So we need to wait until the chart or the price action is above or trending above the moving average. If we look at the MACD line is also below the red line or the signal line, which is also not good, right? We need to wait until the MACD line actually crosses the signal line and starts to go in an uptrend. And finally here we have the stochastic, which is an oscillator. So basically anything, or when you have action above the 80 threshold here, that means that the stock is being overbought. Okay, so there's buying pressure, and then as we can see right now, as of the last couple of weeks, the stock is being oversold. Okay, so not a good time to buy the stock according to the indicators. What I've done is actually, as you can see here, I set up an alert. So I want to be notified when price crosses the moving average, and that way I will get an alert, and then I can start looking at the graph again without having to monitor this on a daily basis. All right, guys, I hope that these tools are useful to you and that you now feel capable of finding potential Rule 1 investing stocks. If you liked the video, I would really appreciate if you can click the like button and subscribe to my channel to stay up to date with my content. And please remember, the first M of the 4 M's is meaning. You have to invest in companies that mean something to you, businesses that you understand, and companies that you are passionate about. Thank you for joining me today, and I'll see you next time. Take care.